It's really quite something, isn't it? I mean, just a few years back, doing most banking stuff on our phones felt kind of new. But now we're seeing this whole new group of digital players cropping up, changing completely how we manage money.
Oh, absolutely. And it's speeding up. It's not just the old banks going digital anymore. We've got these like born digital companies, each doing its own specific job. It's exciting, but yeah, you really need to know who's who.
Okay, yeah, let's break that down. Because today we're diving deep into some key players right here in Pakistan. We're talking about microfinance banks, MFBs, then payment system operators, PSOs, payment service providers, PSPs, and payment aggregators, too.
Exactly. And for this deep dive, we've been digging into quite a few reports. Things like payment security, fraud trends, even money laundering risks, plus overviews of fintech growth and, of course, the regulations in Pakistan. The aim here is really to give you a clear handle on what these institutions actually do, how they operate, what makes them tick, what permissions they need, who's keeping an eye on them, and basically where this whole sector is going.
Great. So let's kick off with microfinance banks, MFBs. What's their main sort of reason for being?
Right, MFBs. Well, at their heart, they're all about financial inclusion. Their primary goal is giving financial services to people with lower incomes, small businesses too. Basically, folks who've had a tough time getting services from the big traditional banks. It's about widening the net.
So they're really trying to bring more people into the formal financial system. I remember our Fintech overview really stressed how important that push is.
Precisely. They offer things like small loans, savings accounts, maybe even microinsurance. It really empowers people and businesses who might otherwise be stuck outside the system. Now, our sources didn't spell out every specific MFB rule, but seeing them mentioned in AML guidelines and knowing the state bank oversees things, it's clear there's a proper regulatory structure there for them.
Makes sense. Okay, let's switch gears a bit. Payment system operators and payment service providers. PSOs and PSPs. They sound similar, easy to mix up, but they do pretty different things, right?
They definitely do. A good way to think about it is PSOs are like the architects. They build and run the basic infrastructure that makes digital payments even possible. Think of ROST, for instance, Pakistan's instant payment system. That's a PSO job, building and maintaining the, let's call them, digital highways for money.
Okay, architects building the highways. So what about the PSPs then? What's their role?
So the PSPs are the ones who actually offer the payment services directly to us, the users. Individuals, businesses, everyone. They use the highways built by the PSOs. Think mobile banking apps, digital wallets, the platforms we use for online shopping checkouts. Services like Easy Paisa, UBL Omni. Those are classic PSP examples in action. And it's interesting, you often see this many-to-one thing happening where mobile companies team up with banks.
Ah, right, leveraging the mobile networks.
Exactly. Gets financial services out there super fast, way faster than building bank branches everywhere. But yeah, it does make the regulatory side a bit complex. Getting everyone to work together smoothly, that's a challenge for the SPP.
Yeah, I remember seeing something about just how fast digital financial services have grown in Pakistan. It seems like a really booming area.
Oh, it really is. Just for context, look at Nepal, smaller ecosystem, but they've already licensed, over 35 PSOs and PSPs. It just shows how vital these players are becoming. And importantly, the State Bank of Pakistan has its own set of rules, the rules for payment system operators and payment service providers. It spells out how they need to operate.
Okay, so PSOs build the infrastructure, PSPs provide the services using it. Got it. Now, payment aggregators, where do they slot into this picture?
Right. Payment aggregators, they act as sort of middlemen in the digital payments chain. Their main job is making it easier for merchant shops, online stores, everyone to accept digital payments. They basically simplify the whole thing. Instead of a shop dealing with 10 different payment types, they deal with the aggregator who handles all those connections.
Ah, okay. So they're kind of smoothing the path for businesses to accept digital money. I think that paper on payment charges mentioned how good they were at getting smaller shops using things like POS machines and QR codes.
Exactly that. They integrate with banks, wallets, cards, you name it, saving the merchant a massive headache. Now, it's kind of interesting. One source mentioned that in India, it's mainly the online aggregators that are formally regulated right now. Obviously, we're focused on Pakistan. But it gives you a sense of how regulations are evolving in this space. It doesn't always happen overnight.
And just to be clear, how are they different from payment gateways? That term pops up a lot, too.
Yeah, good question. Crucial difference. A payment gateway just passes the information along securely. It's like a secure messenger carrying the transaction details. It doesn't actually handle the money. but a payment aggregator. They do hold the customer's funds for a short time before passing them on to the merchant. That's a key distinction.
Okay, that clears it up. And didn't you mention something earlier about transparency issues with their fees?
Yes, that discussion paper did raise that point. Sometimes the aggregator's fee gets bundled into the overall merchant discount rate, the MDR. And that can make it tricky for especially smaller merchants to see exactly what they're paying for each part of the service. It might make it harder to shop around for better rates, too.
Right. Okay, this is starting to form a much clearer picture. To make it even more real, maybe we could name some well-known examples in each category here in Pakistan.
Sure, yeah. For microfinance banks, you've got some really big names. Kushali Bank is a major one. Telenor Microfinance Bank, they run Easy Paisa, of course. And Movilink Microfinance Bank, which is behind Jazz Cash. These guys are really out there reaching communities.
Definitely names most people would recognize, and for payment service providers.
Well, often it's the service name itself that's famous, right? So again, Easy Paisa and Jazz Cash as the actual platforms. But also the mobile banking apps from the big banks like UBL Omni, MCB, Mobile Banking. Those are the interfaces you, as a customer, actually use day to day.
Makes sense. And PSOs. RAST seems like the main one people talk about.
Absolutely. RAST is the big one. It's the state bank's own instant payment system. So it's a perfect and really vital example of a PSO building that core infrastructure for the whole country.
Okay. And finally, payment aggregators in Pakistan. Any key names there?
Yeah, there are several active ones. You might know Sada Pay or Naya Pay. They're quite visible, helping lots of businesses accept digital payments, both online and in stores. And there are others coming up too, all working to get more businesses accepting digital.
Having those specific names definitely helps connect the dots. Now, if someone listening wanted like the full official list of every registered PSO and PSP in Pakistan, where should they look?
Good question. The absolute best place, the most reliable and current source, is the State Bank of Pakistan's official website. They keep a public list of all the licensed PSOs and PSPs. That's the definitive source.
Good to know. Okay, so definitions, check. Examples, check. Let's really nail down the differences now. How do they actually operate differently day to day?
Okay, let's break it down by what they focus on. MFBs, as we said, are all about providing financial services lending, savings to the unbanked or underbanked. They operate kind of like smaller banks, often with physical branches still, though increasingly digital too, tailored for their specific customers.
Right, specialized banks. What about PSOs then, the infrastructure guys?
PSOs are deep in the tech weeds, They build and manage the complex systems, the rules, the software, the networks that let different banks and payment providers talk to each other smoothly. It's about making sure your payment goes from app A to account B reliably and securely, even if they're run by different companies. They handle the clearing, which is verifying the transaction, and the settlement, the actual money movement. Very technical, very behind the scenes.
Okay, the plumbing of the system. And PSPs.
PSPs are all about the user experience. They build the apps we use, the mobile wallets, the online checkout flows. They connect to the PSO infrastructure, but their focus is making it easy and convenient for us to transfer money, pay bills, buy things, user interface, accessibility, features. That's their game.
The part we actually see and touch. Okay, and payment aggregators.
Aggregators are focused squarely on the merchant. They build bridges between the shop owner and all the different ways customers might want to pay banks, wallets, cards. So the merchant just needs one connection to the aggregator, who then deals with all the processing, sorting out the payments, and getting the money to the merchant's account. It massively simplifies things for businesses.
That really draws the lines clearly between them. Okay, now let's say someone's thinking about starting one of these businesses in Pakistan. What hurdles do they face? I mean, licenses, permissions. It can't be easy.
Oh, definitely not easy, and rightly so. You're dealing with people's money. So yes, operating any of these requires getting specific licenses and permissions from the regulators. And a really big one, cutting across all of them, which came up in the sources on fraud and security, is strict compliance with anti-money laundering, AML, and counter-terrorist financing, CFT rules. That's non-negotiable.
Absolutely critical, given the risks we know exist. So who's the main gatekeeper for these permissions?
The State Bank of Pakistan, the SBP. They are the central authority. They issue the licenses, they regulate MFBs, PSOs, PSPs, and increasingly payment aggregators too. They play that vital role in keeping the whole system stable and trustworthy.
So for PSOs and PSPs, you mentioned specific rules. Does that mean a specific license?
Yes, exactly. The SBP's rules for payment system operators and payment service providers make it explicit. You need formal authorization from the SPP to operate legally. It's a tough process. They scrutinize your tech, your security, your financial stability, the whole nine yards.
And MFBs, is it a similar deal for them?
Pretty similar, yes. MFBs need a banking license from the SPP, just like a regular bank. But it's specifically tailored for microfinance operations. It recognizes their unique focus, their target market, the scale they operate at.
Right. And the payment aggregators, we said that was still kind of evolving.
That's right. It seems like a formal licensing system specifically for aggregators in Pakistan is still sort of crystallizing. But looking at trends elsewhere, like India regulating online ones, the strong feeling is the SPP is moving in that direction. We'll likely see more formal rules, maybe specific licenses to make sure they operate safely and fairly. It's an area to watch.
Okay, so it's a tightly controlled space overall. Good for users, probably challenging for new entrants. Now, looking at the oversight picture, who are the main governing bodies involved? And importantly, how are they trying to make these newer kinds of institutions even better?
Well, as we've nailed down, the SPP is definitely the primary governor here, overseeing all these types, MFBs, PSOs, PSPs, aggregators, and their efforts to improve things are pretty broad.
What kind of improvements are we actually seeing from the SPP's work?
Well, first off, they're constantly developing and enforcing the rules. Those PSO, PSP rules are a key example, focused on making the payment system stable, secure, efficient. And the AML-CFT regulations they enforce apply across the board, absolutely vital for protecting the system from abuse.
Yeah, that security focus is key, especially with digital fraud getting smarter, like those reports highlighted.
Definitely. Secondly, the SBP is pushing hard for interoperability, making sure different systems can work together smoothly, and for innovation. Look at RAST. Launching and building that out is a huge push towards a modern, unified payment system for everyone.
Yeah.
And while our specific sources didn't confirm it for Pakistan, it wouldn't be surprising if the SPP is using or considering things like regulatory sandboxes.
Sandboxes?
Yeah, like a safe space to test new fintech ideas under supervision. Other countries, like Nigeria, use them. It encourages innovation without risking the whole system.
Interesting idea. Okay, so besides the SPP, any other major players in the oversight game?
Yes, absolutely. The Financial Monitoring Unit, or FMU, they play a really crucial role, specifically focused on fighting money laundering and terrorist financing. They worked very closely with all these financial institutions, watching transactions, looking for suspicious activity, making sure everyone follows the AML-CFT rules to the letter. You see their importance reflected in things like the FATF Mutual Evaluation Report for Pakistan and the FMU's own reports. They're a key part of the checks and balances.
So it's really a team effort, SPP setting the framework, FMU focused on illicit finance. And it sounds like the big goal behind all this regulation and improvement is what? Building trust.
Exactly. Building trust in digital finance is huge. And expanding financial inclusion even further. It's all about creating a financial ecosystem that's strong, safe, efficient, and works better for everyone in Pakistan, individuals, and the economy as a whole.
This has been incredibly helpful, really clarifying the landscape. So just to make sure we've got it locked in, could we quickly run through those key differences one last time?
Sure. MFBs focused on financial services, especially lending, for the underserved. Think specialized community banks. PSOs build and run the core digital payment infrastructure. The architects, the road builders. PSPs offer the payment services and apps we actually use running on the PSO infrastructure, the user experience providers. And payment aggregators. Make it easy for merchants to accept all kinds of digital payments through one point of contact, the merchant enablers.
Perfect summary. And I think the big takeaway for everyone listening is just how vital these digital players are becoming. They're not just niche alternatives anymore. They're actively reshaping Pakistan's financial system, making things more modern, more accessible.
Absolutely. And understanding who does what, the difference is, how they work, who regulates them. It's really becoming essential knowledge for anyone engaging with finance today. It's just the way things are moving.
So as we close out this deep dive, here's something to chew on. How do you think this continued growth and integration of digital finance, from MFBs reaching new communities to the sheer convenience of PSPs and aggregators, how will it change your own financial habits and the wider Pakistani economy in the next few years? Definitely food for thought. And remember, if you want the latest official info or those list of registered players, the State Bank of Pakistan's website is the place to go.